What is going on, everybody? How are we all doing today? It's Tuesday, June 8th. Markets close here in 10 minutes. Pretty blah day for the most part. I'm still profitable today, but it was a lot of back and forth action. I'm closing today up $2,500, 2,500. But like I said, it was just a lot of back and forth. I started out today. We'll talk about all these stocks I traded real quick. AMC, CLOV, IHT, MOSY, RHE. Now, for the most part, I was gone this morning. I overslept. I didn't wake up till 10 a.m. Eastern Standard Time. So it was more of like that rushing feeling. Firing up the computer, getting to my desk, saying what's up to the chat. Hey guys, sorry I'm late. And then to kick things off, I started out with AMC and it didn't work out. I took a $1,500 loss to start the day. Then after AMC, let's see here. I think it was RHE that popped up. So after AMC, I traded RHE quickly. Just scalping it. I was able to make back my $1,500 loss at break even. So made $1,500 on this. And then MOSY popped up. And I've tried trading MOSY all day, but just kept screwing it up. I would load up on it, and then I would lose faith on it, because I would just start to see it fall off, and I didn't want to get caught in a death candle. So it says I have 24,000 shares. I just kept going back and forth with this one. I would pick up 6,000 shares, and then when it would start to fall off, I'd sell it and wash my hands. I finally gave up on this thing and said the heck with it. Negative 5K on that. And then CLOV popped up at the end of the day. And I told the chat I was expecting this to get a nice rip up to 23. So I loaded up on this one. I made 5,429 on this. And then IHT. I traded IHT. IHT, nice move today from $8.50 all the way up to almost $15. So this just back and forth, like I said, I couldn't find a footing. And being late didn't help either. So up 2,000 on the day, I'll take it. It was a sloppy $2,500 day. But as long as I'm green, that's all that counts. So we can close this up now, because I'm not going to trade anything the rest of the day. I'll take my $2,500 and walk. Right now, we currently have RIDE. It's selling off super hard. This caught a lot of people unexpected. From $15.50, it's all the way down to $11 now. They just put a 10K out. Wow. But some important lessons that I want to talk about in this video, and I may even make this video for private, for members only. So consider yourself lucky if you're going to be catching this video while I'm streaming live. And what I want to talk about is risk versus reward. So as a trader, you want to have a set of rules in place, and you don't want to break those rules, violate those rules. Because when you break your rules, you know you're in the wrong, right? You know when you're breaking your rules. Why do you do that? You got to ask yourself, are you here to trade, or are you here for the thrill of trading? Do you like it when you enter in on positions and you get that adrenaline rush? So are you just chasing after that next adrenaline rush? If so, you need to reevaluate your whole approach with this. Trading should be effortless and easy, like walking over to the other side of the room and picking money up off the floor. I say that to you guys a lot in the chat. So there's a lot of, and we talked about this a couple days ago as well. Someone commented on the stream, why do high of day breakouts fail majority of the time? Why? They just do. 90% of the time, high of day breakouts fail. And all these gurus out here, that's all that they teach, are chasing high of day breakouts. And it's completely normal to think like that because human nature is taking place. When you see a stock up near high of day, your first thought is, ooh, it's going to break that old high and it's going to push up to a new high on the day. Let me jump in on this. When you need to take a step back and be like, yo, this stock just moved from $5.20. It ripped all the way up here to $6. So it just ripped up 80 cents to the upside with this move right here. So I'm going to chase something that just ran up nonstop 80 cents to try and look for a breakout to a new high of day. And then more than likely, I'm probably going to sell into that first pop when I look over at my P&L and I see that I'm in the green. So look at here on this chart on NEXT. We have high of day right here at $6. Look at how many times NEXT, for an example, failed at high of day. It failed. It made the high of day right here at 6. It stalled and failed right there. It failed here. It failed here. Now it's coming back up and around. And now you have to think of everybody this stock has trapped, with everybody thinking it's going to break over 6 and keep going. They're all back holding all down here. All down here. They're back holding. So if this gets a pop right back up to this level up here, all these back holders are looking to wash their hands and break even at least. And then you have a new wave of people coming in thinking that it's going to break over 6 high of day and keep going. And the cycle is just going to repeat over again. And it's just going to get more back holders. Makes perfect logical sense. So 4 times here, NEXT failed at high of day. Let's look at another example. Let's look at, what was a good one today? Let me see. LEDS. This is somewhat of a good example. So notice every single time it got stuffed at that high right here at $28. 28 got stuffed there, came down, came all the way back around, stuffed right at that old high here. Then today, if we zoom up in on today's action, The stock had a good comeback here, and it topped out at $27. Now, people wait for it to come down and come back up. And if you were to buy at that high of day here 2 times, anticipating it to push up even higher, look at where it's at now. Now it's down here. Now you're hoping that the stock comes right back up to your high of day to try to sell it and break even. Or you get greedy and hard-headed and you test it again for that high of day break. Another good one is MOSY. Look at how many times it kept popping up here to high of day and it just kept going right back down. Popping up to high of day, right back down. So statistically, high of day breakouts fail 90% of the time. So what you need to be doing is, all right, if I'm buying at high of day and I'm losing money consistently, I need to figure something else out. I need to stop doing that. So why not burn these images? This is why I preach to you guys all the time. You see great charts like this, Wish, or IHT, big good runs like this. Look back on the charts and study everything before this big move here. Why did it make this big move? Remember that. I try to tell the members here at Trading Learning 101, you should anticipate it before it even happens. You should see it before everybody else. I teach you guys every single day on the gap scanners. New stocks pop up every single day before the market opens pre-market. And what that does is it attracts people to those stocks, and people simply forget about the previous day's big runner or the previous runner days before. Thanks for subscribing, Marco. Welcome to the Wolfpack. So it's just like when Xbox or Microsoft or PlayStation, Sony, they come out with new products, or even Apple. Apple comes out with a new phone. What do you see? You see these huge long lines at the stores because people are excited for new products. They want their hands on it, and they're willing to pay top dollar retail price for that product just to say that they have the newest and greatest thing. Same thing rolls over into the stock market. Every single day you have new stocks gapping up. People forget about these old runners yesterday or from a few days ago. Stocks like IHT. You could see IHT was a big runner here from $3 to $9, and then it starts to fade off, but it comes back up and it's hanging around, and people forget about it. Look at all that volume right here when it first exploded, and then the days after. And then look at that puny little volume there, and with this big gigantic move right there from $8 to $15. That's a nice $7 run right there. And this is where the smart money is, guys. The smart money are paying attention to these big runners days, weeks after they have that big run. Same thing goes for yesterday. ANVS. Look at that. Back here, this was a big runner on May 21st. It ran from $25 all the way up to almost $100. So it ran up $75. And look at all the volume gravitate to that move. So days after, it starts to sell off and sell off. People forget about it. New things pop up. And look what happens. From $40, it had a nice lift, almost back up to its highs. It ran all the way back up from $40 to $80. A $40 move to the upside. And this was a big mover yesterday. If we zoom in here yesterday, look at that move. From $65 it ran up to $84. A $20 move to the upside. And you could have witnessed this or seen it just by simply keeping this previous big runner on your watch list. What, 2 weeks later, it makes a move like this. Same thing for BTX. BTX was a recent big runner. This ran from $5 all the way up to $80. And since then, look at the decline on it. The decline from 80s all the way back down to $13. And from 13, it had a nice push right up to almost $22. Not that big of a bounce, but still there was some opportunity on this stock. This BTX, looking back here, nice run from 14 in a few days, 2 days, 3 days. It ran up to almost $22. So even scalping something like this for $1, $1.50. And I've noticed when you have the stock of the day, the hot chick of the day, the number one top percentage gainer of the day, and it's got massive, massive volume, like CLOV here. It's got 717 million in volume on the day. This is a super, super overcrowded stock. So when you have super overcrowded stocks like this, it just leads to randomness. You have so many different personalities, trading styles, beliefs. Because you got to think there are traders out there who use MACD. I call them cult followings. So you have your MACD cult followers, your Fibonacci cult followers, Ichimoku Cloud cult followers, RSI. All your technical indicators are going to have a little cult following or a big cult following. So with all of those different groups and cults and personalities all trading this one stock, what's it going to lead to? Randomness. The stock doesn't know which way it really wants to go, and it can lead to getting chopped up and spit out. Just like NEXT. This was another number one top percentage gainer today. And look at the moves on this thing. To me, this is an ugly looking chart. This chart showing me a lot of indecision. This stock doesn't know if it wants to go up higher or if it wants to go lower. So what does that create? A bunch of range and chop. Stocks came up to $6 here multiple times throughout the day and failed. It ran up to 6 at the beginning, came back down, ran back up to high of day. And looking back, what did I say? High of day breakouts fail majority of the time. And then it flushes down to here, wants to hang out all below VWAP, run right back up to highs, fail, linger and hang around, retest high again, and then fail back down. So just choppiness and randomness. You can't really get a good read on what the stock really wants to do. So now think of all the back holders who are in on this stock here. So the next big topic, as a trader, throughout the day, you should always be monitoring your thoughts. Monitoring your thoughts is a huge, big factor as a trader. Because in the market, anything can happen so fast, and all it takes is a click of a button to buy or sell a position, and then you're instantly regretting what you just did. How many times have we got excited about a stock? We compulsively jumped in on it and then instantly regretted it. And then we turn into, dang, I hope this works out. Because if it doesn't, it's going to destroy my account. So always monitor your thoughts. And then anytime you ever want to trade, or anytime you're in the market, period, you should always want to be trying to determine, all right, what's the risk versus reward right now? If I was to buy in right now, what is my risk versus reward factor? Am I at risk of losing 50 cents per share to only make 20 cents per share? If that's the case, then the trade's not worth it. The risk is way greater than the reward. So people like to chase after high of day breakouts. We know that. And look at, you have stocks like this that just slowly grind up as the day progresses. And simply look at the volume throughout the day as well. As this stock kept pushing up to new highs throughout the day, more and more and more and more and more volume comes flooding into this. Because people instantly pull this up and they say, wow, look at it, how much money I missed out on. This thing's going to keep going. I'm going to jump in. It already ran up from $8 to $10. It can run up to $12, $15. But they don't think about the risk. Hey, it just ran up from 8 to 10. It just ran up $2 per share non-stop with no pullback. So I'm going to jump in on something that just ran up $2 non-stop over the last 4 hours with no pullback. I could potentially be buying the top. So we all know psychological numbers are a huge factor as a trader. For an example, like your $10 is a huge psychological number on charts. And look at how this stock, Wish, came right up to that $10 and it found resistance right at it. 3 different times right here. 4 times actually. Right there. People may say, well, Mr. Wolf, you're technically wrong. It found resistance at $9.77. Get out of here with that. I'm paying attention to the general area, bruh. It's $10 every 25 cents, every 50 cents. I'm going to pay attention to the general area of the price. So if a stock is at $9.88, generally $10.75, $10. I'm not really paying attention to the specific price that it's at. So we all know that $10 is a huge, huge level. That's where everybody has their eyes. Nobody's putting a random sell order at $9.91. Or no one's randomly buying at $9.91. It's going to be at these whole dollar levels. So this breakout here, it breaks over that $10 and runs up to $10.25. Now it starts to pull back, and now you see right there, it's holding that $10.25 or $10 old resistance as support. Then from there, we get this run up to 11 up here, just under 11 bucks. So I'll put it right there. $11. So we had somebody in our room call out, I just scalped Wish. I got in at 11. I sold at 10 or 11.40 for profit. And this is what got me into thinking of making this risk versus reward video. So you're chasing after a high of day breakout. The stock just ran from $10 up to $11 up here, making a new high. We know high of day breakouts fail majority of the time. You're buying at 11 for that break of high of day to run up higher. This stock just ran nonstop up $1 per share from 10 up to 11 right here. This could have easily had a death candle from 11 right back down to $10. So you put yourself at risk of losing $1 per share to make a lousy 40 cents. Because it popped up to 10.40s when you sold it, which is right there. So you're buying at that high of day break to make 40 pennies. Or if you're wrong, you're going to lose $1 per share. That's a horrible risk versus reward. And I'm not trying to put this person on the spot, but what you're doing by doing this, you're breaking your rules. And it might have worked this time, but in the future, it will burn you. Nobody wants to take $1 per share loss. And you made money on this trade, so you're telling your brain it's okay to break my rules. And this setup's okay. You're rewarding your brain for going after horrible risk versus reward setups like this. You get what I'm saying? It's just like when I tell you guys at the beginning of every month, withdraw from your account your profits and pay yourself. Pay yourself for all that hard work you put in, showing up every day, all that studying that you've done. Your brain likes to be rewarded. And when your brain gets a reward for all the work that it's done, it feels good. And your brain is going to want that feeling again. So other times as well, people who chase after high of day breakouts like this, they're trading for the thrill. They don't know how, they don't actually have a plan in place. They don't know where they're going to take profits. They're just going to take profits as soon as their P&L pushes them up into the green. And then majority of the time, they take their profits off the table too quickly. And then they continue to watch the stock go higher and higher and higher. I mean, how many times have we all done that? And I get that question all the time from multiple people. How do I know when to take profits? I always find myself taking profits off way too fast. How do I hold on to my winners for longer? And the honest question with that is just showing up every day, getting that time under your belt, and you're seeing how these stocks like to move day in and day out. You're getting familiar with the stock market. When you're brand new, you're freaking out. You don't know what to expect. You're in unfamiliar territory. Everything's new to you. So you get that time under your belt, You're here every day for 3 hours a day, 5 hours a day. You're seeing all these different chart setups, these different stocks, market cycles. You're seeing things over and over and over and over again. You're burning all of these images and setups into your head. And then over the course of your career, you're going to be like, yeah, you're right. High of day breakouts fail majority of the time. I found myself always trying to buy right at the high of day break, and I'd lose money. That's why people lose consistently as traders. They don't trust themselves. They don't trust in what they know. It's like that saying, you buy fear and you sell greed. Learning about the stock market and day trading, guys, it's a huge eye-opener to how much stuff really goes into this type of stuff. And it's like that guy Shark from SMB Capital said in one of his interviews. Nobody has ever came into this and instantly was good and just instantly started making money. Nobody ever has. Nobody ever will. I mean, there's people that show up and they get lucky the first month or, for the first couple months. But down the road, they're ultimately going to end up giving back all of that profit and then some. And then they start to realize there's more to this. And then they start going off and looking for trading communities to be a part of and to learn more about this game. And then they don't study and look into all of these different trading groups. They just jump to the first one that they see. Timothy Sykes, for an example. They jump into his group. They don't like it. And then they give up and quit. Let's see how the CLOV did here. Ran all the way up to my $23. Over 700 million in volume on the day. The stock did almost $1 billion in volume. That's a lot of money flowing into this stock. So if you guys are watching this video live on the stream right now, consider yourself lucky. Because after this, I'm probably going to make it for members only. And it could be for them. That's a big topic we always talk about in the community. Always monitoring your thoughts and the current risk versus reward on a setup. Because you have to ask yourself, before you hit that buy button, how many of you actually take a step back and say, hey, before I hit buy, what's the risk? What am I looking to risk before I hit this buy button? And then you could quickly see, like, oh, wow, if this doesn't work, I could easily see it slamming down $1 per share. And then if I jump in on this, and if it does pop, I'll probably end up compulsively selling it for a profit. So is it worth it to lose $1 per share to make this 25 cents? And you're going to be like, no. And then you're going to step back. Monitoring yourself, guys, is a huge part of this game. At the end of every single day, I try to tell you guys, get a good night's rest, come in the next day prepared, and you need to self-evaluate yourself before you sit down at your trading desk. You have to ask yourself, Did I get a good night's sleep? Is my brain reset? Is there anything on my mind that could distract me during this trading day? Let's say you get into an argument with somebody and it's really upsetting you, or something happened in your life that's really upsetting you and you can't get it off your mind. How are you supposed to concentrate and give full attention to the stock market with that distraction on your mind? So it's just like if you wake up, like what I did today. I woke up late, I overslept. So what happens? You realize you're late. You rush to your computer, you turn everything on, and you're quickly trying to catch up on everything that's going on, what's popping up. And you're overwhelming yourself. You're getting all worked up. And then you can potentially overlook something. And then you could take an L on the day because you were not fully prepared and you were rushing to make that money or potentially try and make money for the day. So it's that you got to take a step back and be like, yo, I'm late today. I'm going to chill. And I'm going to take my time, get set up. And if anything comes up and presents itself later on down the line today for an opportunity, maybe I'll take a stab at it. But as of right now, I'm unprepared and I'm in no way ready to take on this trading day because I'm rushing and I overslept. I think that was a very, very good lesson that we just covered and went over, guys.